Will I have to admit all of these people, Soundra? You've given me the
I
admit.
am doing it. I am doing it. Yeah, I've already did it. You please go ahead. I will just take care of it.
So yeah, thank you. So basically, currently I'm working with the Indian Venture and Alternate Capital Association. We recently rebranded to Venture and Alternate Capital Association. Earlier, it used to be called the Indian Private Equity and Venture Capital Association. So I've been with the industry body for almost 5 years now, and what IVCA, the acronym, what we do is we help the private equity venture capital investors engage with the government of India on policy matters. So that's our primary charter, and apart from that, we since it's a wider organization, we have investors from all facets. I mean, so starting from venture capital to private equity, to different strategies, real estate, infra, category 3 alternative investments, all of those.
तो राजेश बता दीजिए जो करना है मैं कर देता हूँ.
So across all of these sectors, we are focusing, and every couple of years we have an executive committee that comes on board, and which gives a good mix for how we drive the industry ahead. So in the last 2 years, we had Renuka Ramnath from Multiples Private Equity, who was the chairperson, and we focused. And incidentally, as she came on board, COVID happened, and we took the agenda forward around COVID, and the industry moved in a very different way, although in a very collaborative way with the government of India, allotting even more time to the industry and the industry matters. Thankfully, the wait time, the meetings got fast tracked because of the online meetings, etc. So it became all the more easier to engage with the government, and our efforts even fast tracked to a certain extent. So I personally at IVCA focus on the venture capital ecosystem. So I'm a part of the Venture Capital Sector Council at IVCA, and we focus on all of the policy matters, like I said first. Secondly, all of the other industry related efforts, like all of the reports that come out on the VC ecosystem, any other engagements with the government, and since I'm a part of the VC ecosystem at IVCA, we also focus on startup related issues. I'm based in Delhi, and we work very closely with the Commerce Ministry, DPIIT, Startup India, and at IVCA on a broader level. Obviously, we engage with everybody from the Ministry of Finance to SEBI, RBI, all of the other regulators as well. So that's where I've been in the last 5 years. Before which, for a couple of years, I was with the Inc42. I was heading their overall operations and setting all of the team in place. Actually, me and Vaibhav, if you know the founder of Inc42, we actually started together. I was working on a different startup at that point, which was helping startups hire talents across the country through colleges, fresh grads, etc. So that didn't pan out. So then I joined Inc42. I was helping with their operations and events and stuff like that. So that's how I started my startup journey. Before which, incidentally, I was in the manufacturing ecosystem. So I was I was heading the All India Marketing and Business Development for a company named Ruskin Titus, which was into the heating, ventilating, air conditioning ecosystem. And so that's a brief about myself. Now going over to the topic for today, which is crafting the perfect pitch. So I think it's a very ambitious topic, but I'll try to have some discussion around that. So let me just share my screen so that we can put it up. Can you guys see this?
It's low.
Yeah, can you see the presentation?
Not yet, Amit. It's loading.
Yeah. Can you see it, Sondar?
It's still coming up. It's not yet
coming
visible.
up. Yeah.
Not a.
Could you maybe try unsharing and resharing it again?
Okay. Let me do that. Yeah, can you see it now?
Yes.
Yes.
So I just mentioned Sonder that I can speak around around pitching, and then he made this very ambitious topic, and he added what investors want to hear. So I'll try and do justice to that to whichever extent I can. And maybe I'll first start from some of the industry statistics. So like I said, we engage with a lot of reports, etc., in the ecosystem. So this is an annual engagement which we have with Bain. This is from the VC ecosystem. This is the VC ecosystem report. And obviously, I mean, as we can see, the last 2 years, I mean, 2019 and 2020, in fact, the COVID times didn't see as much growth as was expected, but still the momentum was there. And last year, obviously, was a big comeback for the ecosystem, and we were hearing everything from IPOs to all of the tech IPOs, startup IPOs to ESOP buybacks, and a lot of engagement around the startup VC ecosystem. So that said, it shows the momentum and the optimism in the ecosystem, and not just these statistics, but I mean, coming from a standpoint from the industry body where we engage both with the government and the private capital ecosystem, we can see that it's an overall transition to a more digital sort of economy, wherein even the government is trying to come up with policies that can support, but obviously always the monkey is on the back of the private capital ecosystem and the entrepreneurs of the country to drive this. And when I started back in 2014-15, I mean, almost any startup, and I mean, it wouldn't be wrong to say that almost any promising startup was getting funding at that time. So the number of startups were very less in numbers, but the investors were sort of engaging with all of the startups who had any sort of a promising deck. But coming from 14 to 21, 22, the investors are right now, the investors are really more cautious and more focused on specifics, because the scope is also widened. I mean, 14, 15, probably there were very less sectors, and e-commerce has still been driving, but across the years, fintech came, and B2C, D2C came, B2B came. So a lot of new sectors came up and picked up really well. So that's how we see that in 2021 we've reached to a point. So it's almost a decade, or more than a decade at work. In fact, it started somewhere around the end of 2010, around 2008 to 10, where the ecosystem started picking up, and almost a decade down the line now in 2022, it's a much more mature ecosystem. A lot of these funds, if you go back, a lot of these VC funds started around 2010, and they've also raised almost 3 or 4 funds, and specifically talking about the VC funds. So they've also raised around 2 to 4 or 5 funds of their own, and that shows that the ecosystem is maturing as the investors are also maturing, and they've also delivered returns to their sort of investors, their limited partners. So that's a little bit about the last 10 years. And talking specifically about the sectors, again, we can clearly see that obviously e-commerce is still playing a big role, and obviously the Web3 is here. There is NFT, there is crypto, which took a lot of fintech, which contributed a lot of in the last year's funding, and the other sectors are pretty much there. But I would say that for sectors like B2B and the industry 4.0, these things are also picking up. Deep tech is a lot of funds are specifically focusing on deep tech ventures, and so is the government, and they are trying to come up with policies and focusing on this area as to how they can support this ecosystem. And specifically talking about the deep tech, this is a little old data from till December, almost November 2021, and still we can see that the share in this ecosystem for the deep tech startups, starting from around 2 to going up to the 5% mark, it's a significant rise in the amount of funding, and for the deep tech startups. And uh, yeah, so these are some prominent investments that happened in 2021 in the deep tech space, and it also shows some of the investors, the kind of investors that are focusing in this sector. These are some of the topmost investments, but if we really see, then deep tech is seeing a lot of interest from across investment ecosystem. There are funds like Ionist, there are funds like GrowX, Bloom, bunch of other investors that have taken early bets in this ecosystem and are focusing more and more. And so I think as the ecosystem is growing, like I said, more than 10 years of active startup VC engagement, we see that more and more it's, I mean, the industry 4.0 is here, and it's here to stay. And it's going to be much more active than what it used to in the earlier times. And so talking a little bit about exits, obviously, like I said, that we had 40 plus unicorns in 2021. There were tech IPOs, and it delivered a lot of value to the investors as well. Almost 7 odd big investors got really handsome exits from some of these listings, and because of some of the support by SEBI, and in terms of the listing norms, etc., the tech IPOs have taken a really big footing in the door, and there's been quite a lot of attention and focus given by the investors as well for the tech IPOs. I mean, more than 40 tech IPOs, I guess, in the last year. And so the startup ecosystem is making its mark, and it's time for exits coming back. And there have been certain secondary sales as well, secondary and strategic sales as well as some of the buybacks. And so I think all of us, I presume that all of us know how the VC ecosystem works, but maybe I'll dwell a little into that. I mean, this is obviously we're all aware of how the industry 4.0 has evolved, and from the last the 18th century and onwards to where we are right now, with the smart systems getting adopted across the industries, and given the kind of consumer story that India is at right now in terms of the digital adoption, in terms of the mobile penetration, the costs. I think this will be driving certainly the next decade. And the NASSCOM report also says that by 2025, a lot of 25% of the GDP can come from the industry 4.0. And this is the NASSCOM report that I was referring to. So as we can see that there's been a lot of investments going into the sector, and it's almost a 10x since 2011, and the expectation is 200 billion plus by 2025. So that's a lot of money which will go in, and then certainly there'll be a hunt for the right talent, the right set of startups who will capture this ecosystem, capture this space. And on that note, I'd like to really thank this particular forum also, which is playing such a important role in boosting this ecosystem. And I was reading an article around the same space, and interestingly, at IVCA, one of our charters is to onshoring the offshore pools of capital. So, for example, a bunch of these policies, if they become easier for the Indian funds, the alternative investment of funds, then more and more domestic capital availability is will be generated, and which in turn will go into these startups. And so, for example, there's the LTCG parity that the industry has been seeking with respect to the listed markets. And this year there was a little reduction in the surcharge, which reduced a little bit of a tax. But as this ecosystem in due course of time becomes more and more attractive, we'll see more and more private capital coming into this ecosystem from the corporates, from the family houses. And as that comes in, it will certainly start getting more and more deployment to the Indian ventures. And as it becomes more and more attractive, the asset class, in terms of taxation parity, some other policies, the listing has already started. So industry 4.0 is something which will definitely see more and more participation from the corporates, the Indian corporate houses, family houses, which again is going to solve a bigger problem. I just go to that slide. So as we can see in this slide, 69% of the companies are seeking mentorship and market access. This is a survey done by NASSCOM for the industry 4.0 emerging tech startups. And we can see that one of the biggest challenges for this sector is market access. And this market access can certainly come from, the corporates and more engagement of the domestic family houses. So as we are moving in this cycle of the, maturity of the private capital ecosystem, so along with that, we'll see all of these new sectors also developing, and it's kind of, the whole cycle is at play right now, and the whole ecosystem is growing, likewise in the sync. So so I'm just going back to again, referring some of the industry stats. So as we can see that, the mature technologies around cloud computing, IoT, 3D printing, etc., is something which is already seeing a lot of adoption. And in the next 5 years, we can see, we're talking about 4D printing and quantum computing, stuff like that. So I think, as we are moving ahead in the next 5 years, and as it always happens in a country like India, the cycle is shorter in terms of growth vis-a-vis compared to the other developed ecosystems. In an emerging economy like India, it will always be a little fast tracked in terms of some of these technologies, because it's that the market is also available and the consumer is also available, and there's also enough talent in the country to churn out such talents, and obviously then eventually there's enough capital to be deployed to this asset class. So this certainly is a very crucial point of time where a lot of these activities will certainly, as predicted by NASSCOM, I have a lot of confidence that this will certainly pan out in the next 2 to 3 years, and we'll see it for ourselves, and we'll be witnessing this wonderful change. And so some of the changes, like that are marked there, in terms of the global industry 4.0 adoption, as we can see, is that in the mature adopters, less than 30% of the global manufacturers have this 30 the 4.0 technology adoption. And as we move ahead on top of the pyramid, the global industry adoption, it's going to be massive in by 2025. And certainly, like I mentioned earlier, also the policy framework will also play a key role in the evolution of this ecosystem. And although I would, in terms of in terms of priority, certainly it's the private ecosystem which will evolve first, and then maybe they'll become the driving force to getting some of these policies changed, as it usually happens. Once the ecosystem grows, the government also sees more value creation in terms of obviously all of this will expand the employees. There'll be a lot of job creation. There'll be a lot of through this innovation, the country will come to a better positioning globally. So and one of the biggest factors is that a lot of these factories that are based in India are currently outsourcing some of these materials. And as it becomes more and more convenient in India, so like I earlier mentioned, IVCA is focusing on the onshoring of the offshore pools of capital. I think right now it's time for onshoring the offshore onshoring of the sort of technology, And once we build this thing inside of our own country, and with the big, sort of make in India movement, a lot of factories, the geopolitical tensions with China, I see that a lot of these will certainly come back to India. And if we can really manufacture with these smart technologies here in India itself, so it's a win-win for everyone in the ecosystem, starting from the startups to the fund managers, and even the government. Because see, working at IVCA, I've realized that the government is literally just like a corporate house. I mean, they also have to generate their own revenue, which comes from taxes, and if an asset class is generating enough, providing enough employment, which is another big charter for the government of India. So if there's enough employment, if there's enough sort of tax generation, then it just becomes easier for this ecosystem to roll even in a faster way. So this we just came across. So a little bit about how the private capital ecosystem has evolved over the last couple of decades, 3 decades, so to say. So I mean, initially in around the early 90s, it was just setting up of the regional funds, and there was not a specified framework as such. And around the mid 90s, there were some of the global private equity venture capital funds that came into existence. And then around 2000 and onwards, obviously we see that a lot of these traditional global brands like Axel, etc., etc., they also set up shops in India, which certainly then 2010 onwards, a lot of these domestic players also started setting up, and the AI framework become more in place. And SEBI came up with the Alternative Investment Policy Advisory Committee around that time, which again, IVCA is a core member working along with the SEBI. This APAC committee is chaired by Sri Narayan Murthy, and it gives all of the recommendations to the regulator in terms of how the ecosystem should evolve, and we've seen a lot of changes there as well in the last 10 years. And so just one example, and why I'm sharing a lot about these funds is because as an entrepreneur, one should really understand how a fund also operates, because it becomes easier to sort of maybe read their minds and talk in their language. Then obviously, I mean, as a startup, you have to talk about your own strengths and your technology, etc., etc. But if you understand who you are pitching to in a much better way, then obviously it becomes easier to sort of craft your pitch. And that's the craftsmanship, I guess, which usually in young entrepreneurs is missing, because usually these are young entrepreneurs. India is a very in terms of these startups, a lot of young entrepreneurs come in, and maybe 5-7 years ago it was still much more alienated. Right now it's very easy to find all of these details online. And just like a startup is raising funds from VCP investors, similarly these funds also raise investment from some of these limited partners, institutional investors, family houses, and sovereign wealth funds, etc. So these are really big entities who invest in the funds, and then these funds in turn invest into these startups. And so I mean, if we can really see, I mean, so this is currently coming back to this slide. As we can see right now, I mean, right now I would say there are more than 350 400 funds, more than 400 funds at least, that are actively investing in the country. And this I'm typically talking about the micro VC, angel, and VC investors. And counting private equity, maybe close to 450ish. That's the kind of number of investors that we have right now in the country. So it's one of the easiest times to raise fund for a startups. At the same time, since the ecosystem is matured enough, so it becomes equally important for the startups to craft the perfect pitch, for which again a good understanding of how a VC firm operates or a PE firm operates. It's I mean, a PE, obviously, once you raise a VC fund, you'll get to know more about the PE, but understanding how the angel or a VC or a micro VC is operating, I think that will give a better understanding to the founders when they're pitching to these investors. So this is a little old data from an EY trend book, which was released last year. It has data to 2020. So I guess, in the last 1.5 years, a lot has happened, and this number has certainly grown much more. Like I said, around 400 plus for sure. And so again, coming back to 2020 and beyond. So 2021, as we already discussed, and we are all aware about, India surpassed China in the number of unicorns, and in terms of, currently we stand at close to 100 unicorns, which is, the third largest startup ecosystem in the world. So obviously it's a promising time, and so the whole ecosystem is evolving, and these small little bits, like we see in terms of even the kind of remuneration, the packages that were offered to engineers, coders, say, even 4 or 5 years back to what the times are right now. We can clearly understand that, there's a lot of capital availability with the startups and the private capital ecosystem that's there. So but it just needs to be deployed in the right way, and certainly industry 4.0, deep tech, I mean, these are going to be playing a big role in a country like India. And earlier I mentioned about some of the, ESOP buybacks. So there were like more than 30 startups which did that. And then certainly there have been some secondary sales, etc., which is again, good for the venture capital ecosystem, because I mean, just like a startup needs to grow ahead and, sort of exit in some of the other way through M&As, through IPOs. The same works for generating returns for a venture capital fund. And for them, secondary sales are also a very important aspect, and that is also now becoming an integral part of the Indian ecosystem. So it's a very positive sign that a lot of exits, as exits start coming, I guess, the ball coming, I mean, the ball is rolling even faster. There's not just momentum, but there's a increasing velocity. And so coming back to some of the uh, I mean, in times to come, what else can happen. So certainly, the like I mentioned, the what we need to watch out certainly is obviously, some of these regulatory policy related matters. On this particular slide is talking about gaming, crypto, fintech, etc. But as we step ahead or move ahead in this ecosystem as well, there will be stepping up of the engagement with the government, and and with the promising ecosystem, through this, setting up and setting up all of these roundtables and discussions with the government. I guess, it will sensitize them in due course of time in terms of any policy challenges that the industry is facing, and it will certainly help the ecosystem in growing. And I mean, interestingly, it really helps to, all of these policy matters. There is NASCOM, there is ISPER, there's IVCA, and all of us are here to help the ecosystem. And I've seen personally that it really helps the ecosystem in, sitting in front of these people and, sharing your story from the horse's mouth and sensitizing them. So I mean, usually, I mean, as we can all understand, it's a big bureaucratic system, people coming in, going out, moving in, moving out. So you always need to constantly engage with them. But certainly with constant engagement, changes do come up, and if there are any bottleneck issues, certainly the government is there to help the ecosystem. So that's again, where we can focus on in terms of, building this ecosystem. So coming back to what investors want to hear, I mean, before that, maybe, I'll just take a pause in case anyone has any questions, or wants to ask anything in particular.
So Amit, this is Amit here. Thank you again for the context setting. But now that since we have only 25 minutes, you tell us what's the model, because see, all the startups here that we have today are Industry 4.0 and deep tech related, right? So if you can just give a guidance on how exactly the pitch should look like, what are the hooks, what are the communications? Because see, you have been on both sides of the world. You have run a startup, and now you are part of the VC community. So what exactly are the pitfalls, what they should be looking at, what they should be really careful about, based on your experience, if you can share? And maybe what we can do is we can have all the participants have a more lively, because I know that you love question and answer. So maybe what we can do is we can have people put questions at you. I hope that works well for you.
Yeah, absolutely. I'd love that. So if any other question till now, I'll be happy to answer, or I can move ahead. Sure. So I'll just move to the main topic of discussion. which is what investors want to hear. And like I mentioned, so, I mean, just to understand the venture capital, the angel, micro VC, venture capital ecosystem. So, all of these investors are obviously, taking multiple bets, and the whole point of all of this is that usually, I mean, the power law, the law of power, it comes into picture, and ideally, even I mean, in a very generic example, say for example, a VC fund with 100 million sort of corpus invests in say 10 to 15, 17, 20 startups, and typically there are only one or two startups that are really going to be giving them the biggest returns. So but they're always focusing on the right set of teams, the right set of technologies, the right set of companies to really invest in. So I mean, Peter Thiel, I mean, he himself invested in Facebook in an early stage, and he got more than $1 billion returns for a maybe a very very smaller amount. And there are similar stories in India as well. Like for example, uh, there's Rehan Yar Khan from Arise Venture Partners, and he discussed how in a very similar fashion when he reached out. I mean, so he met Bhavesh at a IT Bombay event, pitching event, and when he met, so there was a cold pitch Bhavesh did with Rehan, and at that point he was. I guess maybe working with the Mumbai Angels, and then he invested an amount in his personal capacity, which saw sort of around maybe 1600 x returns that he generated from that investment. So, that said, the investors are looking out for the right set of talents and even would pitch on an idea. Although, I mean, this ecosystem is much more than an idea. It's more about getting your hands dirtier and really knowing about your sort of venture, and maybe folks with a little bit of experience, or maybe somebody who's got a really on ground experience, specifically industry 4.0 around factories or stuff like that. I guess that will work for the advantage. So I was just chatting with Kiran, and he shared that I mean that's what he mentioned, right? I mean, so some of this is specific to the industry 4.0. It makes I mean, the VC would be much more confident if the startup is really dirty, dirtied his or her hands on the shop floors, and maybe has some more on ground experience than just an idea. So that's specific to the industry 4.0. But in generic terms, just move on to the next slide. So what I feel, generally these are the very basic things, and if we can really capture, if an entrepreneur can really capture all of these things in the whole DNA of the venture, then it becomes a very venture funded, I mean, friendly startup, so to say. So I mean, obviously you have to get your facts right, and what I mean by that is that you should be on top of the numbers, so because those are really important things when you're pitching to an investor, because probably a similar startup is already pitched to them. So or maybe they already have a similar startup in their portfolio. So what really matters is that your facts are really you have a complete confidence in the kind of facts that you're presenting in front of an investor. And that said, obviously the other things are important, like the product market fit. There should be some sort of a POC, and what the investors really focus on nowadays is also a founder market fit, which again boils down to the fact that if you have some sort of experience in the ecosystem, that would really help always. And certainly as an entrepreneur, you must really sort of research your investors. So it's not about, I mean, like I mentioned, there are already around 400 investors, of which if we talk about just early stage, it would be around 100 plus, specifically around the micro VC early stage angel ecosystem, 100 odd investors there. So there are a lot of investors there, and I remember meeting Vineet, and this is like a couple of years back, right before COVID. Vineet Rai of Avishkar, and he said that literally, I mean, we were joking that I mean, nowadays they have to literally drag a founder inside a boardroom and get him to sign the term sheet, because the founder has much more options than what an investor might have. So I mean, it's really easy to raise funds if the things are in context for a startup. All of these elements are in place, and What's more important is that you choose the right investors that you have to pitch to, and you really find them, and then you spend the right amount of time in terms of once you have the complete deck in place and the the whole business plan in place, then you sit in front of an investor, and then you and there are other smaller details, like for example, usually which entrepreneurs miss out, and I'd like to emphasize on that right now, because we at IVCA we worked on a guidebook for entrepreneurs a couple of years back, and we are trying to revive that, which covered all of the tax regulatory norms for, and how to manage a board meeting. So I mean, those are really important aspects, which obviously, founder being a tech background person, or a tech and business background. I mean, if it's a tech and business background, then it becomes easier. But usually, tech founders lack awareness in terms of a lot of these technical aspects. So you must get maybe have some other co-founder in your team who can focus on those aspects, because that also drives the confidence of a venture capital investor. I mean, usually single founder companies are difficult to fund, but if there are multiple founders and with multiple backgrounds, and you have a good mix of a team, I think that is one big sort of a tick mark for a VC to sort of really interact with the startup. And there should be definitely a very solid pitch wherein you cover all and everything that is possible in terms of uh, you know uh, in terms of what is the key USP that the company has, and what is the total addressable market, what is the big market, and what are the returns that you are trying to generate. Because like I said, these funds are also constantly sort of raising funds. So in a span of say typically a fund fund, when a fund raises a fund, it's for about 6 to 7 years. So in the first couple of years, they are taking bets very slowly, and they're investing in I mean, right now, that's typically how it's working right now, is that in the first couple of years, the investors are very carefully reaching out to these startups. I mean, discussing with these startup founders, and really getting into the depth to pick and choose the really right sort of startup. And once that happens, then obviously they are also supporting, and the last 2 or 3 years, then they keep some of this cash to disburse for the next round of fundings in some of these startups. And by the time they're closing their tenure of the fund, they are already raising their next fund. So why this is important is because one has to understand when you're approaching a VC, so what stage of a fund they are at. I mean, so this is one small detail which usually people don't have, but it's very easily available. If it's an AIF, for example, if it's an alternative investment fund, all of the data is available on the SEBI website. So one can really go back and do a lot of extensive research around the kind of investors that they're reaching out to. And I'm sure the investor would respect the fact that the startup founder has already researched in depth about them, and understands their thesis, not just thesis, but some things which are not even listed on their website. The funds that they have done in the past, the kind of investments that they have made in the past, the kind of portfolios, if they have a similar portfolio, then what has been their engagement in the past, etc., etc. So I mean, really going into depth about the VC that you're pitching to is really important, and would really help the cause when you're discussing with the investor. And other small tips, like for example, whenever you're reaching out to a VC, try and connect to the partner level person, because if it's an analyst, if it's an early team, younger team, then probably they're just vetting, and it might take time to reach to the partner. But if you can really make a connect with the partner through any references, or any which way, I think that will be, or through social media, whichever way possible, I think that would be a really important thing, to speak to the right person in the team. And all of that is available again on the website. So you can, all of these partners, which portfolio companies they have, they are on the board of, all of this is available very freely on the website of these companies, or some of the newspaper articles. So all of this is really readily available. And if you can really if a founder can really or a startup can really do this research, it will be so much more easier. Say for example, in a particular fund, like Axel or Lightspeed, say for example, if you're reaching out to Dave Khare, and you've done enough research that he's investing into SaaS, and he's in the valley right now. So I mean, a lot of those things will really help when a founder reaches out to these investors. And so do your homework, saying which. then obviously there needs to be a story. And platforms like TIE, etc., they keep on organizing such sessions where around storytelling, etc., etc. But they are really important. I mean, sounds really sort of very small thing in terms of storytelling, but it's really important that you have a really inspirational journey. And if you really go back and read some of these stories of these ventures, there is some sort of an inspirational journey that they've had. And I'm sure every entrepreneur to that matter. I've also started up and did not succeed much, but I was a core team at Inc. for a two, and I've worked and I've interacted with tons of other entrepreneurs. And I very strongly feel that entrepreneurs always are going through that journey with a lot of passion and grit. And there are certainly a lot of ups and downs. So the storytelling craftsmanship is putting that story maybe in a minute or so to the investors, to really emphasize that you have that sort of drive, and to going to that last mile. And because entrepreneurship is full of stress, and it's a lot of ups and downs. So whenever an entrepreneur is venturing into a startup, it's a sort of a 5-7 year haul, which will be filled of so many ups and downs. I mean, wouldn't like to say that, but there are entrepreneurs who really go on the brink of going on a mental breakdown verge. And it's really difficult. Starting up is really difficult, and these investors know all of that, right? Because they are interacting with all of these investors. So you have to present that you are in the long haul, you have that long-term vision, you understand the challenges of entrepreneurship, and that has to come out through the story that you come up with. And that drive is here to stay and not to go away through some a couple of speed breakers on the way. And certainly, like I mentioned, all those technical aspects, technical jargons, they are very easy. I mean, you'll find tons of presentations where which will incorporate all of these terms, whichever type of a startup you are. So I'll not focus much on them, but certainly every startup, any venture is about profitability, it's about value creation, it's about interacting with the customers, whatever it is, if it's a business to business or if it's a direct to customer, all ends meet. End of the day, you are dealing with a customer, and you have to ensure you have to have that DNA to ensure that you really understand your customer, and you're really there to serve your customer. And there are certainly tremendous benefits of adopting your technology or your venture for the customers. And that's where maybe the POC comes into picture, where you already have some sort of some of these validations from some of the customers, which you can present to these venture funds, which will again sort of help your case when you're pitching it to the VCs team I've already talked about. And then and all of this package fit in a very compact way. For example, if you're sending it out on an email, you can't send a 40-50 slide to an investor. So you have to crisp it up and say 6 to 10 slides, and it has to really convey the whole message which you're trying to convey. Even if you sort of even if you're doing this over an email, or even if you're preparing an elevator pitch, I mean, you should have all those formats. And I'm not joking, you should be able to really give that elevator pitch in less than a minute to assuming that you'll meet an investor in an event, for example. And these things happen. I've personally had some of these investors who've met LPs in some of these events and have got confirmations. So I mean, similarly, startups also get funded over a very small meeting as well. I mean, at least you can get your foot in the door if you have that elevator pitch right. So be prepared for whether it's an in-person elevator pitch, or if you have to send a 6 to 10 slider on an email, or if you have to elaborate that in person. And so do those pitches, do a lot of practice sessions with whoever you can. If you have friends in the ecosystem, if you have mentors, I think nothing like it. And just be really thoroughly prepared before you're really going out and meeting this investor, which you're reaching out to after a lot of research. So I think all of this combined will certainly make a package which an investor can certainly consider, and and obviously, if it's a venture, you're doing your own homework and you have your own technology in place, etc., etc. So all that put in a package, I'm sure it becomes something which the investors will really get interested in, and I think this all of this briefly can be the craftsmanship in pitching to the investor. So I mean, over to others, over to the attendance audience for any questions here. I'll take a pause here.
Thank you, Amit. Thanks a lot. So there are a couple of questions in the chat box. So
okay, I'll just see one question. Most of the investors are worried about the long cycle time, income passes, assessment, factory visit, pilot ROI. So certainly, see, I mean, like it or not, venture capital funds, like I said earlier, they have their own cycles. They have their own cycles of 5 to 7 years. But there are, venture capital funds that are focusing typically on, industry 4.0, deep tech startups, and who are typically focusing on the B2B venture. So, I mean, you will always find some investors who are focusing on the idea that you are working on. So the whole thing is about finding that investor who's already interested in a venture like yours, and then they'll obviously understand that, say for example, if it's a biotechnology startup, there will be a bigger time line than, say, a 3 to 5 year timeline. For a mobile app, for example, it could just blast off in like 2 to 3 years, 5 years. But in building up a biotechnology venture, it'll take time 8 to 10 years. So if you reach out to the right set of investors, you'll always get because you'll always get the right sort of response, because they're already sensitized to it. So I think that would be my take on this question. I hope I've answered it, Avnish. And
So thanks for the answer. Just because I have been meeting quite a lot of ventures of VCs of different background. Yeah, I see two aspects of the thing. One is like, yeah, definitely who doesn't come from the same space. But lately, what I found is the VCs who are coming from the even the deep tech space as well. They are looking for something which can be like a VCS kind of cycle, where like the business can explode very fast. But you know that that this particular industry 4.0 specifically is not the same type of business. It takes time, and the customer do take time to even accept the solution, even before they really want to go for scaling. That's pretty much is the challenge which I'm seeing. Yeah, I'm meeting some VCs who understand that, but they don't. Then I see that they want to really still do further level of analysis to understand how it can scale eventually. That part is still fine, but most of them, yeah, they are worried about the business acceleration part.
So that's absolutely true, Avnish, and that's why we'll see some of these. I mean, e-commerce, for example, why it expanded so much so soon, and a lot of these similar ventures, and the trends that we saw earlier in the slides. I mean, the whole point was that, I mean, it's all market validated fact that that's where the focus of the major chunk of VCs is. I mean, that's how this ecosystem operates. It's come from the valley, and most of these investors are themselves technocrats, and they've worked in the valley, or they've worked in this ecosystem as a IT tech background only. So I mean, that's usually where they're coming from. But then you'll see folks like Idea Spring, where they've been on both the sides, right? I mean, so probably somebody at Idea Spring would understand a venture like yours in a much clearer way, so to say. Like Suri, I had a word with Suri from Idea Spring, and he was mentioning how he's run multiple ventures of his own. And I think those kind of investors who've done their own ventures would be much more sensitized towards a business like this. So I mean, again, I understand the number of investors might be smaller right now, but if NASSCOM is saying that 25% of the GDP is coming from this, hey, I'm sure there'll be much more investors who'll be reaching out to folks like you in this year, certainly. So I hope that answers your question.
No, thanks a lot.
Yeah, and then the other question is by Kiran. Another question on industry open funding. We are not seeing large investment deals in double-digit million USD. So, question would be whether industry open startups should look at more of a non-VC investment, strategic investment. See, I think like I said, validation is really important, and what I will say is in the last few years, especially in the last 2 to 3 years, what has happened is because of this big digital push, even some of the traditional family houses and corporates, I mean, corporates were already there, but I mean, it's my personal belief that Indian corporate ecosystem, Indian CVC ecosystem will work in a very different way than what it does in the global context. Why? Because the Indian market is very different. The Indian startup ecosystem is very different. And I'm sure there'll be, more and more I mean, again, there's a lot of challenge in terms of, how a corporate can fund a sort of a startup. I mean, those are more technical glitches, but as they get settled down in the next few years, and we're trying to work with the government on some of those issues as well. So recently, Mr. Bikhchandani, Sanjeev Bikhchandani was in one of the meetings where he said that, I mean, it's a big challenge for them to invest into startups through their own balance sheet, because that's how they have to do it, right? So there are a lot of issues there, but I'm sure as in due course of time, as the government is also understanding this, and as it's becoming more and more prominent, there will be more sort of non-traditional investment avenues available for founders. And like I said, some validation really works, and then sort of some of these ventures, say, I mean, 5 years ago, if you would have sort of talked about a biotechnology venture with a long life cycle, probably you would not have found anyone. But right now I'm seeing that there are more investors who are stepping in, who are focusing on this sector specifically, and they'll gradually pick up. I guess it will be a gradual growth in the ecosystem as well. But certainly, some of the strategic investments, reaching out to the corporate houses, and getting validation there, and maybe I guess again, as we can all see, I mean, a very small example, again coming back to this forum that we are at. I mean, this forum did not exist 5 years ago. There's a reason behind that, because the ecosystem had not arrived at that point. But right now, the ecosystem is there, and a little bit of nudge by leaders like present in this forum, Intel and ID Bombay and all of the other partners who are working on this in this forum. I think this will give the push. So I mean, 10 years from now, we'll see that Amit of Intel and all of these team here contributed to the growth of this industry 4.0 ecosystem, and build the ecosystem, and those will all be stories. But I think that is what is in the making right now, and in due course of time, we'll see more VCs also who will step into it full time, and will focus more on this ecosystem. And but right now, rightly said, there is a little bit of shortage in terms of focus on this asset class. But I'm sure with tons of I mean, there is a lot of awareness that has happened in the last 3 to 4 years, 5 years, and the VCs are upbeat, and they are focusing on B2B, not just B2B commerce, but other B2B and industry 4.0 and deep tech startups as well. So it will gradually build more avenues in terms of VC avenues building up for this asset class as well. I hope I've answered that, Kiran.
Yeah, thanks, Amit. I think that's kind of, we're seeing that some of that as well in terms of the level of interest that we had. So we had started pitching around 3 years ago, but we were not doing a VC level pitching, and at that time we had got interest from a couple of corporate kind of this only, and the VC interest was not there at all. But over the last 6 months, we've had much more, at least VC interest. It's still, I would say, in the same boat as what Avnish was mentioning. But I think, yeah, I agree. As more kind of investments come in overall into this, there will be, at least some level of openness.
Can you briefly tell us, Karan, just for my advantage also, what do you do?
Yeah, so a quick, this is our product name is Shopworks. We basically provide visibility and help manage complete manufacturing shop floors, and we're focused on automotive and white good component manufacturers in India, Thailand, China, in Southeast Asia, basically. So that's at a brief what we do. So our vision is to be like the manufacturing OS for the shop floor. So that's what we're doing.
No, I'm sure. I mean, there are some success stories in the B2B segment that are building up right now. We saw 4 unicorns last year in this space, and I'm sure, the story is building up, and there will be, folks like, it's a brilliant venture, it's a brilliant idea, and I'm sure there'll be more sensitization for such ideas.
Sure.
The traditional VCs as well in due course of time.
Yeah.
Any other
Thanks,
questions?
Amit.
Yeah, most welcome. Any other questions? Anyone? No, I guess then.
Doesn't look like, yeah.
Yeah, I have a question. This is Shubha from Embed Solutions. Hi. We have been trying to pitch to investors, and lo and behold, it is generally the analysts who start off. So it's always a challenge to get the partners. And you're right. If we speak to partners, they can understand it more probably in a better way than the analysts. Typically, analysts are tuned to identify, okay, which startup is going to be a unicorn in 2 years or something like that, right? As you clearly see that cannot, to the most part, I wish to be wrong here. It is a difficult. It is difficult to become a unicorn in being in manufacturing startup, in this manufacturing space in the span of 2 to 3 years, right? What we need really, I feel that, I continuously keep hearing this, we need that you need to understand from the VC side. They are looking at 10 startups, and out of 10, they know that 8 are going to fail, and in the remaining 2, they need to make up for the rest of it, right? I think where the kind of investors that we will be needing as a group of industry 4.0 startups here is some folks who are having more of a patient capital, because you see, all of us have this drive, all of us have the passion, and all of us have the technology, right? But getting that investment has been real hard, because point number 1, analysts are the ones who speak to us. They don't understand most of that we speak, because we speak a lot of things that they are unaware of, because they're usually used to hearing things from consumer space, right? This is this e-commerce startup, this I'm making one app, as compared to creating an app, having an industrial IoT startup or industry 4.4 startup, it needs a lot of capabilities in the founders as such, right? Okay, going back to that point, right? So what this is my personal opinion here. What industry 4.0 acceleration needs to look at is investors, bringing in investors who have patient capital, who who can do that wait and watch game, because as you said, we are in it for good. We are more like a mutual fund, not like a startup, not like a stock, where stocks can rise very fast or fall very fast, right? We are more tuned towards the mutual fund. So that kind of investment, right? So I think this is a point you had to Amit and Sounder and folks. So I know that we are all preparing for the investors pitch. So I think if the investors mindset can be kind of tuned to accept the fact that that they're looking for more of a mutual fund kind of an investment rather than a stock kind of investment, I think most of us will be in a good shape in another few years down the lane, because of the fact that it is industry 4.4 is there to stay, and we are confident that all of us will do great in that space. And it is a good thing for a country as well, because we are creating lots and lots of jobs, right? So yeah, we look forward to that kind of a mindset being, conditioned in the investors, Amit and Saundar. Thank you.
No, that's really a valid point. And to that note, maybe next time, I guess if we are engaging on this forum, maybe I'll come up with I'll speak to some more investors and get their point of views, and maybe see how really it's going inside their sort of houses, and focusing on this specifically B2B industry 4.0 niche, and maybe get some more perspective down to the audience on this topic. So I understand right now it's a little limited in terms of exactly on ground facts. And I mean, the fact being, I mean, obviously we all know that like you mentioned, risk capital, patient risk capital, that's in fact that's what they call themselves. But and that's what it is. And I guess this is maybe in due course of time, like I mentioned, as this becomes more and more promising, and maybe the whole ecosystem working together, like this forum and all other forums coming together, more leadership taking interest into it. I think gradually, there will be more investors. I mean, at least there will be more number of VC funds who will be focusing into this asset class.
We look forward. Definitely, yeah, thank you for Intel and Science IIT Bombay for taking this initiative.
Thank you so much, Shubha, for the feedback. But again, thank you, Amit, AP, for coming in. But yes, there's a long way to go. We are starting this particular journey, and startups need as much help. And this is something that I really love about startups, that they're always ready to take in whatever information that they can get, wherever they can get it from, right? I think that zeal or that thirst of knowledge is amazing. And with that, again, love to thank you again for coming in. We will have to go through a little bit more of these sessions. And when we go through these sessions, we will have potentially very directed approaches towards certain areas. What we would like to do is, again, revisit on certain topics. We'll get all our startups to come and tell us what is going on, what they need specific insights about. And we will again come back to you for those insights, Amit. And again, thank you for all the support that you have brought in.
Thanks. Thanks, Amit.
Thank you, Amit. Thank you, Sundar. Thank you, Science IIT Bombay and Intel team for putting this together. And like I promised, I'll next time get some more research and facts on the ground in place, and probably have some more perspective shared from the VCs. I'll certainly collate that for the forum next time.
Thank you so much.
Sure. So can I request everyone to just turn on the video, just take one quick picture.
Quite a few
Of
people
us.
have dropped, but yes, I think we can sit. Excellent.
Yep.
Thank you. Have the snap? Okay.
Yeah.
Fantastic.
Yeah.
Have a great evening, everyone. And thank you, Amit.
Thank you.
Thanks, everyone. Thanks for being a patient listener. Thank you. Cheers. All the best.
Thank you.
Yeah. Thanks for the presentation. Thanks. Bye-bye.